In today's video, we're going to be taking a look at a particular chart no one is watching. This chart provides crucial information according to historical price action for Bitcoin and key invalidation points for the current bull run and uptrend. This is a chart you want to be paying attention to and a video you don't want to miss. Let's jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be doing an in-depth analysis on the macro and the short-term charts, discussing things such as the 2-day Gaussian channel, the importance of the 55k level, the short-term price action, and of course, everything you need to know about what will happen next. Before we do get into it, smash that like button, hit that comment button, and again guys, subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us over on VIP, where we post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Not only will you get access to all of our trading setups, you'll get access to our group chats, our general chat, trading chart and education chat, news, help, daily video, and trade setup chat. If this is the kind of stuff you are interested in, go ahead and contact me by the pinned comment in the free channel. For more information, you can go ahead and click these links as well, guys. Let's go ahead and get stuck into it. So like we said in the start, we're going to be going over that 2-day Gaussian channel chart, discussing why this chart is significant, what we have seen occur in prior cycles, and how it can indicate two things. Number one, invalidation points of the uptrend, and number two, it can justify the fact that we are an uptrend and likely give us targets to where we could go next. So we have a lot to discuss, guys. Let's start on that market data. 24-hour volume is up 47%, sitting at 147 billion. 24-hour liquidations are up 121%, sitting at 189 million. Of the 189 million in liquidations, we can see 121 million have come from long positions and 68 million have come from short positions. If we do zoom over to the short-term price action very briefly, we can see within the last 24 hours, we had a fair amount of volatility. We saw a nice move toward the upside as the game we talked about in yesterday's video. We told you guys that a break of this RSI downtrend would result in a rally toward the upside. We saw that rally toward the upside, took us to around 65.5k, but it did not sustain. Although it was a nice move, it didn't sustain. We have seen a correction back down, breaking back under that neckline of support we developed, actually deviating to these range lows. So we're discussing in today's video what is happening here and what to expect next. But as a consequence of the large volatility up and larger volatility down, we have seen liquidations increase over that 24-hour period. Moving over to the broader markets, the DXY is very much in exactly the same spot it has been. Not too much has changed here. Again, if we do see a bounce above this trend line, we could see reclaim, or the price action reclaim, these high points. Until then, while we remain underneath this trend line, we are expecting continuations lower. Of course, the DXY goes down. This is generally bullish for risk assets, S&P 500, Bitcoin, etc. If we do see a rise, it's generally bearish for our risk assets, and I say that in a general sense. So moving over to the broader markets, we can see the S&P 500 has had a fantastic week so far. We are up green at $5,204. We can see establishing support as a retest at that 5,000 level, and even coming back down to retest that 5,100 level on the prior weekly candle. Currently pushing upwards of 3 days and 22 hours remaining on the close. It is looking like a strong week. Again, like we said already, any correction that develops, whether it be from over here or over here, whatever it was that took us to 5,000, we were expecting a macro continuation upwards from that point, as the 5,000 level is not only a key high time frame support, it is a trigger point for the trend to flip into a downtrend, and thus it is going to be defended by the buyers provided we remain in this uptrend. So at the moment, we are expecting macro continuations upwards. The next leg up starts when we break over that prior high point. We're expecting an explosive move for the S&P. If we do see the markets turn around, if we do see inflation data come out very bearish again, we could see some pullbacks, and if we do see pullbacks pullbacks develop, which pushes the price action underneath 5,000 and a weekly candle closes under 5,000, we would have been then expecting a correction to our 2021 high points. Until then, the upward move is more probable. Moving to the Dow Jones, exactly the same scenario over here. We can see it is lagging a little bit in compared to the S&P. It is retesting that 39K trigger point, which you would know is basically the respective version of that 5,100 level on the S&P 500. Again, we did bounce nice and strong from that 37.7 to 38K region, expecting macro continuations upwards. A break underneath that region as per developing news or data, we could see a breakdown, and again, that would be quite bearish as it would indicate that the high time frame uptrend has ended and a high time frame downtrend will continue and begin to that 2021 high point. Until then, the most probable direction is a macro continuation upwards, and that is what we are expecting. So that is up for the updates. Let's go ahead and get into Bitcoin. A quick word from our sponsor, BitUnix, before we do. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and jump on in. And in the start of the video today, we told you about the 2-day Gaussian channel. So we're going to start our video today on the macro charts and then break it down to the short term at the end. So the 2-day Gaussian channel is a very interesting indicator. The Gaussian channel itself, again, is a band. It is a reflection of two things. It is a reflection of the direction of price action, the strength of price action, and the overall volatility of price action. So it's a great tool on the macro scale to gauge how the price action is moving, how it is developing, and how the strength is shifting in terms of volatility over a high time frame. If we do take a very brief look at the Gaussian channel and I explain how it works before we get into what we're talking about today, we can see we have two phases of Gaussian channel. We have periods again where the channel is red and periods of which where the channel is green. Simply put, the channel is green when the price action pushes above the level, and the channel is red when the price action pushes below. When we are red, it is significant. It is an indication of weakness. When we are green, it is an indication of strength. Particularly when we're looking for shifting movements or continuations into downtrends or uptrends, we look for breaks in and out of the channel. For example, when the channel is red and we are traveling under the Gaussian channel, a break of the upper band of the channel would indicate the end of the downtrend and the start of the uptrend. Whereas again, if the channel is green and we see a break of the lower band of the channel, that would represent the end of the uptrend and the start of the downtrend. When the channel is red or green, and the price action is sitting underneath it and it breaks the closest band, that is an indication of shifting strength. From again, if we're underneath, would be from bearish strength to bullish strength. Not enough to actually shift the trend, but it'd be indication of an early shift in strength. Whereas again, if we're above the channel and we break into the upper band, that would be an early indication of weakness, but is not strong enough to revert the trend. So that is generally how we use the Gaussian channel. So let's talk about now how the Gaussian channel has shown us, what it has done historically and how we can use historical data to justify potential movements in the future. So as we can see, the Gaussian channel is currently pushing upwards. Not only is the Gaussian channel green and pushing upwards, the price action has remained above the midline. And I want to go ahead and really make you aware of that midline. The midline, that solid line in the middle of the channel, we have remained above it. We can see we retested the Gaussian channel once. We have pushed into the Gaussian channel. We didn't retest the midline, but we've remained above that midline. Now, I do want to go ahead and point out the significance of the midline. Again, the midline is the trigger point for developing strength or weakness to be validated. So like we said before, when we see a break into the channel, this is again a downtrend, we see a break into the channel, this is going to be an indication or a preliminary indication of bearish exhaustion, therefore developing bullish strength. A break of the midline is confirmation when that strength has actually been validated. So the break of the midline is going to be confirming the developing or shifting strength of price action that we get an indication of when we initially break into the channel. So it is absolutely significant to validate the shifting strength over a period of time. So if we look at the historical price action and we look at the current price action, we can see some massive similarities, particularly when we draw a horizontal trend line from the dead cat bounce high of the prior cycle on the 2-day chart. We can see in historical patterns, in historical bull runs, what we have noticed is when we break above that level, we never see the price action in the entire bull run break underneath the midline of the Gaussian channel until only we enter a macro downtrend, okay? So we remain above the midline of the Gaussian channel on the 2-day chart. If we zoom to our prior cycle, we can draw the same horizontal trend line. This horizontal trend line is going to expand from here to here. We can see upon breaking out of that trend line, we never really drop below that midline. Again, we're retesting it, retesting the Gaussian channel multiple times. And when we finally break below that midline, that is when we enter that macro downtrend. So what we have seen over here so far is a pattern that when we break above that dead cat bounce high point, we generally remain above the Gaussian channel for the entirety of the bull run, or at best, we do not drop below the midline. And when we do drop below the midline, that is going to trigger a downtrend to start. So the same thing goes over here, guys. We draw that horizontal trend line. We remain above the Gaussian channel. We break into that. We see that downtrend develop. That takes us underneath the channel for Bitcoin. So again, if we're looking at the current price action, we can see the price action is steadily sitting above the midline. The midline is sitting at a very important point, and that point is the $55,000 region. So let's now talk about why a breakdown of 55K would be catastrophic and why we would like to see 55K remain as a high time frame support, which could trampoline the price action upwards on the macro scale. So moving over to this chart, this is going to be our weekly chart, the Pi cycle indicator. We're going to be taking a look at two indicators, the Ichimoku cloud and the Pi cycle. What we have seen on the weekly chart is that once the Ichimoku cloud is broken in by the Pi cycle lower band, what we see from this point onwards until the top, okay? From this point onwards until the top, and we have seen it in prior cycles, we'll show you in a second, the price action never drops below the midlines, which is going to be the yellow and green lines of the Pi cycle indicator. This is actually sitting at 55,000, which lines up with the midline of the Gaussian channel. So we can say a breakdown of the midline of the Gaussian channel would actually indicate a downtrend is forming on the macro chart from a technical perspective from the 2-day chart, and now we have double confluence on the weekly chart as according to our Pi cycle indicator. So if we go back in time over here and take a look at prior indications, we can see we break into the Ichimoku cloud. What we notice is the price action once more remains above the midlines of the Pi cycle indicator until we finally break it and enter that downtrend. If we go back to our prior cycle, we can see the same thing. We break into that Ichimoku cloud, the price action remains above the midlines until finally it breaks underneath and continues down. So we can see on the weekly chart using the Pi cycle indicator, it shows us there's an area of confluence at 55K, which is significant from a technical basis, which is representative of macro strength. So in other words, a loss of 55K on the weekly chart would show us there has been a significant shift in strength toward the bearish side, which could potentially result in an end of the macro uptrend, not an end of the bull run. Not at the end of the bull run, but an end in the macro uptrend for multiple weeks or potentially a few months. So we do not want to see a breakdown of 55K. Now, what have we also seen is while we remain above these levels, we continue above these levels, right? While we remain above 55K, we continue up to a new all-time high. And the same thing can be said for that 2-day Gaussian channel, right? The same thing can be said for the 2-day Gaussian channel. When we remain above that Gaussian channel midline on the 2-day chart, we see macro continuations upwards. So we are expecting the same to continue provided we have those validations in check. Now there's another chart that can add a triple confluence to the 55K level, and that is going to be, if we go to the daily chart on the high time frame, that is going to be our our uptrend, okay, as per this chart right over here. This is going to be our current uptrend. We are on a log scale for this chart over here. This is going to be our uptrend. On the log scale, again, we can see 55K. This region down over here is going to be reflecting, again, this multi-month. It's like a 7-month long uptrend. So a breakdown of that level on the log chart on Bitcoin would also indicate there is a triple confluence at the 55K level, which again will result in a breakdown of the price cycle on the weekly and a breakdown of the 2-day Gaussian channel. So some very, very important levels we are watching over here. If we go ahead and flip that to a standard chart, the trend line does drop a significant amount more, and we can see that we could see a move down to that 52K region if those levels are lost. So some very important levels to be paying attention to. It really goes to show that that 55K level is of absolute significance, and there's some new indicators now that you have to observe and watch over time, specifically that Gaussian channel and that midline of the Gaussian channel on the 2-day chart. Let's go ahead now and discuss Bitcoin's price action and then wrap up the video. So we're not going to get into too much detail today in terms of the high time frame. All we really need to know, guys, is Bitcoin is still very much in this high time frame consolidation. We have got our range high, we have got our range low. Perfect. For our macro continuation upwards, we would like to see a break over 73.8. This is going to be the range high deviation. That would send Bitcoin back into price discovery, resulting in a macro continuation. For a macro continuation downward, we are going to have to drop below this 56.5K level, which is the range low of our prior drop below our sell side liquidity. That would validate a correction back down to 52,000. Again, if we bring up our VRPV, as we've said the entire time, a 4-hour candle close below our sell side liquidity will result in a downtrend continuing, which would result in two targets, number one 57K and 52K. 57K was our first area of support. We did not fail to continue. We did not fail to hold this area. In fact, we bounced from this area, ticking that correction. That correction on the 4-hour under the sell side was done. We saw a correction to 57 as per the VRPV, and we bounced from that level back into our standard high time frame range. So again, the price action is bullish. If we do break below this range, that is when we fill that second gap on the VRPV. So until we see a break under that level, we are expecting continuations upwards. However, the short term is showing a little bit of weakness, and we're going to be discussing what that means in just a moment. But to provide context, what we can see, guys, is Bitcoin has broken out of a 4 to 5 week long downtrend over here, and we are currently sitting above that downtrending diagonal. So again, while we remain above that downtrending diagonal, again, we are going to be in a supposed short-term uptrend. If we do go ahead and flip the chart, sometimes by viewing it from a different angle, we can change our perceived biases, and we can see that again, if we were in a overall uptrend and you saw that breakdown, you would be expecting a continuation lower as opposed to a break back into that trend line. So again, it can show you how just flipping the chart can shift your biases, your subconscious biases, if you have any, in terms of what the price is looking at or looking like. Because again, what it looks like has nothing to do with where it really is going, right? You can look at something and based on your biases, based on your personal experiences, based on your expectations, you can formulate or delude yourself into thinking certain things which actually really don't exist. So again, rationale, okay, or risk without rationale is delusion. You have to have rationale to back up your justifications or to back up your risk. So if we're looking at this downtrend again, we are expecting continuations upward provided this hold. Now on the short term, again, we are seeing a bit of weakness over here, right? We have broken down from this uptrend. If we go ahead and draw this uptrend in, we have seen a little bit of a breakdown from this uptrend. We've had a double confluence over here, a few retests, another retest over here. This is going to our uptrend support line. This level is less significant than our horizontal levels, which we'll show you in a second, but it is an area of interest that we have broken down from. If we are looking at that short-term price action, there are two things we are watching. We are watching, number one, the RSI, because we have had a bearish divergence play out now. Okay, we had the rising price action. We had the rising price action right over here. Okay, let's go ahead and change it to black. The rising price action and the decreasing momentum. So we had that bearish divergence play out. Now we do want to see that bearish divergence invalidate, and for that to occur, we would need to see the RSI break that trend line to then tell us we're going to be going back up to 67K. So we want to see 67K, the RSI needs to break. If we see that breakout, we see a continuation upwards. It tells us we have got the strength to continue higher. On the short term, if we look at continuations downward, if we just go ahead and delete everything really quickly, we can take our horizontal level. So again, we are watching the specific range from our sell side liquidity, okay, into this consolidation period. This is going to be our current short-term level of support. We are watching this level. This level is going to be a bouncing point for Bitcoin for either a continuation upwards, or if we do drop below this level, okay, we are going to see a continuation lower. If we bring that VRPV up again, we can see this is an area of massive volume. This is the area of reduced volume. So if we do drop below this level, we will likely see a downtrend take us potentially as low as that $60,000 region again. So we could see a downtrend develop. Again, that wouldn't happen immediately, but it could develop if that level were broken. So those are things we're watching on the macro in the short term. Have a fantastic rest of the day, guys. We'll catch you guys in our next video on Thursday to update you guys on what has happened and what is happening. I'll see you then. Bye.